Okay, thanks everyone for coming along. This is our presentation. You can see I've put this diagram up on the front page because it tells a lot about the company. It's a three-dimensional image based on a 3D seismic survey we acquired in one of our permits in 2011. And it shows an existing oil discovery called Gwydion, which lies within our permit. It's a oil discovery drilled by BHP in 1995. Encountered a 24-metre hydrocarbon column, 14 metres of gas over 10 metres of oil in exceptionally good quality reservoir, recovered oil to surface, approximately 30-degree API oil, so it's a very good oil. You can see right next door that prospect called Petroleum, which I don't know, I can't show it on there, but it's called Petroleum. It's a large, elongated, channelized stratigraphic trap, which we've imaged there, and you can see interpreted oil, interpreted gas. There's a proposed well that will be drilled by our farm-in partner called Cal Energy. It's likely to be drilled around about July this year, and it's fully funded by our farm-in partner. So we're listing our company on the ASX during this month. The planned close of the IPO is April the 5th, and we're looking at listing around about April the 18th to 20th. Two other points I want to make about this diagram. You can see we're oil, we're in shallow water and shallow reservoir depth. We're in about 75 metres of water, which means it can be either drilled with a jackup or a semi-submersible drill rig, and also shallow reservoir depth, which means cheap development costs, cheap drilling costs. By way of example, this Petroleum well has a P50 or a most likely well cost of about $15 million. And you compare that to well costs deeper out in the basin of circa $100 million. So I'll just go through the disclaimers. I'll take those as read. A couple of other points I wanted to make. We only got 10 minutes, 15 minutes. So if anyone wants a copy, I'll give it to you afterwards. A couple of other points that I've made most of these points, but you can see the second dot point there. PGS, the cornerstone shareholder. PGS is one of the three major multinational seismic companies. They're based in Norway. They acquired about 8.5% of us as a cornerstone seed investor in November 2010. The other point I'll make there is you can see independent technical experts report. The second dot point, IPB's net share, that's our equity share of oil just in one of our permits, the permit where we're drilling our well, has over 500 million barrels of mean prospective recoverable oil in our permit. So we're floating the company at a $50 million valuation. That's at 10 cents a barrel of mean prospective oil resource. The other point I'll make there is you can see the offer listing on ASX. It opened almost 2 weeks ago and closes on April the 5th. Okay, so here's a bit of a history of the company. The 2 points I want to make is if you look, we've raised about 8.9 million privately to date, been privately funded. Our last raise was in June 2012 at 46 cents a share. The IPO price is at 50 cents a share, so not much uplift. And the reason why we've priced it at 50 cents is we wanted to pick, in the absence of anything else, a nice round number that stockbrokers can deal with. Secondly, we're not raising a lot of money, so dilution is not a major consideration. And thirdly, we wanted to have a successful float because the most likely largest dilutionary event will be when we go for a much larger raise post-success at Petroleum. Assuming we have success, of course. The minimum raise is 2.5 million and we're looking up to a maximum raise of 5 million. The other key point there to note is the farm-in deal, which is the second last dot point. We signed a farm-in with a company called Cal Energy Resources, and I've got a slide on that. They're owned by Mid-American, so I'll leave you to research them. They're a very large energy company based in the United States. And the key point is it's ahead of the drilling of our Petroleum well in around July this year. Okay, here's the board of directors. I won't labour this. You can see we've got two executive directors, myself and Phil Smith. I started off as an engineer over 23 years ago with BHP Petroleum. Worked in Northern Australia, not far from actually where our permits are now. Also got a finance background. Phil Smith, he's a co-founder, has a geoscientist background, over 30 years experience. And we've got three non-executive directors. We've got an exceptionally experienced board. One other director I'll point to is Jeff King, who's both known to Phil and myself. He's also ex-BHP. He was the head of BHP's exploration in Australia and Asia, and was responsible for the discovery of the Gwydion well, or Gwydion discovery. So this is where we are. This is the Browse Basin. It's a world-class basin, northwestern Australia. You can see the Kimberley coast there. World-class gas condensate fields in the deeper part of the basin. You've got the Prelude and Ichthys project that's being developed with $40 billion of development capital. And you've also got further out in the basin the Browse project. You can see R2 permits there. We believe that the Browse Basin is similar to the Carnarvon Basin further to the south in Western Australia, which has produced over 1 billion barrels of oil to date, has a near-shore oil fairway similar to the Carnarvon Basin. So you can see our 2 permits there. There's one well drilled in our permit, an oil discovery at Gwydion, and then you've got the Cornea oil field to the north. I'll just go through this simulation because we've got limited time, but this is a cartoon of the original Gwydion well, and they drilled this well in 1995 and found oil below a structural spill point. So the reason we got into the permit was there was the potential for oil to be stratigraphically trapped up dip and therefore a much larger accumulation. So our plan was to get the permit, shoot 3D seismic and unlock this riddle. And that's what we got. So in fact we were half right. You can see Gwydion now looks like a standalone accumulation with a sister structure next door, and then this very large Predator prospect which has a mean recoverable oil resource of 40 million barrels. If you were to pick the industry standard of $20 a barrel NPV, that gives you 800 million NPV. We own 75% of this permit. That's a sideways arbitrary line through the seismic. The key point to note there, you can see Predator reference level. You can see red is gas, and you can see water at the reservoir level where those 2 arrows are pointing under the Predator prospect. You can see a brown, and then it tapers off to a white colour at the down dip shut-off. We believe that yellow intermediate signal is an oil signal. We've done a lot of work to validate that. So this is the key for the whole permit. This is where you can see the red outline, our 3D seismic survey, and the green dots, green markers. They're what they call direct hydrocarbon indicators mapped on 2D seismic. Now if you zoom in, you can see that the maps, the DHIs, the structures mapped on 2D, when you shoot 3D, got a very, very good correlation there. So what that tells us is that with the benefit of the 9 2D surveys, there's a hell of a lot of follow-up potential. So if we were to acquire 3D seismic in the rest of the permit on the back of success at Predator, there would be substantial follow-up potential. Where you find oil in one place, you're going to find it in another. And the independent expert has validated this, and you can see this is out of the independent expert's report. They're given 40 million barrels mean at Predator, and they've given over 282 at that one level in the rest of the permit. And you can see that's the work out of the independent expert's report. I can talk about that later. And you can see our share over 510 million barrels of oil net to us. So a farm out to Cal Energy, effectively, I've got 1 minute left, so I'll quickly go through this. Cal Energy are funding the drilling of our Predator well, and the well is effectively uncapped. So they will fund 100% of the cost of that well. They have an option to spend additional funds up to $32.5 million less the cost of the well after drilling Predator to increase their interest from 25% in the permit to 60%. They also have an option to come into the 471P permit to the north where we own it at 100%, and a new gazettal block that we've bid on, which I can't really talk about till it's offered to us. Assuming it is offered to us, they can also come in at 25% interest in that permit. So valuation considerations, the 2 points I want to make there, 510 million barrels of oil, that puts an IPO value on the company at 10 cents a barrel. The Cal Energy farm in, they get 25% of the permit for spending $15 million. That puts a 45 million valuation, enterprise value on that one permit, our share. So the IPO, 60% of the shares will be escrowed by ASX for 2 years, and the balance of the register will be free trading. Source and uses of funds, we're largely funded. We've got somewhere between 18 million and 38 million of funding, so we don't need a lot of money to float. And long-term strategy, I've got 0 time left, is we don't want to be an operator into development and production. We would bring in an experienced operator. We can operate the permits up to discovery and appraisal and booking commercial reserves. So if anyone has any further questions, I'll be more than delighted to answer them, and I can also give you a copy of the presentation. And I've got a whole lot of prospectuses which I would like to offload to people if they're interested. Thank you.